The Energy Transition Podcast takes you directly to the cutting edge of the global energy sector's shift, with a specific focus on the critical role played by oil and gas, as well as the pathways developing around a lower carbon future. Your hosts, Leslie Beyer, Energy Workforce and Technology Council's CEO, and Dan Pickering, founder of Pickering Energy Partners, are joined by Josh Lowrey, president of Upright Digital. Each episode engages industry thought leaders in an exploration of market-moving trends and topics, including new technologies, ESG, capital markets, inclusion and diversity, workforce innovation, regulatory influences, and the voice of the people. Join us as the Energy Transition Podcast looks at the state of the traditional energy and oil field service sectors, emerging technologies, and the path ahead in a world of lower carbon energy development.
Welcome to the Energy and Transition Podcast. My name is Josh Lowrey. We are coming to you live from the Upright Digital Studios in Houston, Texas. I am joined, as usual, with the co-host extraordinaire, Mr. Dan Pickering. Dan, how are you, sir?
I am doing great. I just came back from 4 days of basketball total immersion. I went to Greensboro, North Carolina, and watched March Madness.
Nice.
So I watched Friday and Sunday games.
Okay.
Saw Kansas State and Xavier come out of that regional. And so you put March Madness together with Bank Madness, and it has been a busy last 10 days.
How's your bracket doing?
I don't want to talk about that.
Yeah.
I want to talk about the fun that I had.
Yeah, that's right.
And you? What's going on?
Well, my bracket is, I've got Houston in it still, so that's one. Everybody else is out, I believe. Life is good. We took the kids skiing, snowboarding for spring break, which is a lot of fun.
Awesome.
Yeah, we put my little 10-year-old girl on a snowboard, and she cried for 2 days, and she finally got it. So I think the permanent damage that I was hoping wouldn't be done is not going to be done. So that was great. But yeah, just we are in a sweet time in life and trying to enjoy it. I got really deep on this. I didn't expect to go that deep, but honestly, the snowboarding with my daughter, I spent a lot of time with her on the mountain, just her and I.
Yeah.
And, normally it's my son and I, and it just, to see her kind of break through was awesome. So really enjoyed the spring break time. Yeah, it was fun. So she kind of pushed through and came out of it. She lost a tooth at the same time, so she comes out with this tooth, and she's like, I'm just so proud of myself. So really good time on spring break. It's good to see. I'm glad you had a great time and watching some March Madness. Did you go over with your wife as well?
No, this was a guy's trip.
Yeah, so, that's a lot of basketball.
Yes. If you think about everything you imagine on a guy's trip, we had it. Poker, beer, late nights.
You look great.
Bad food.
I guess we are in the middle of the week here, so
yes,
you've had some recovery time.
I've been recovering.
Yeah, well, good.
Yes.
Well, do I sound a little nervous? I'm a little hyped up on caffeine per the usual, but do I sound a little excited?
Are you excited and nervous? Because why?
Well, we have 4 people in the room today, which is not normal. We usually just have 3. I've done more research for today than I've ever done. So I'm either going to blow this or I'm going to just hit a home run. We're about to see. TBD.
I think you're going to hit a home run.
I do too.
And do you
want
to kick off?
No.
Or do you want me to kick off?
Yes, you do this. This is okay. I just did my part.
All right. Well, we're very lucky today to have 2 fabulous guests from Freestone, Ellen Wilkirson, Alan Boswell. Thanks for joining us. As we try to do every time on the podcast, rather than me try to botch an intro, you guys get to intro yourself. So tell us a little about you, and Alan, you go first. Now, when we did this on the phone, your intro was you and the business, just you, because we got to get Ellen in here, and then we'll come back and talk the business.
Great. Well, first of all, thanks for having us. Really appreciate being here. Looking forward to the conversation. So, yeah, Alan Boswell. My background is in energy investing, energy infrastructure investing, and I along with Ellen, started Freestone about 2 years ago, and I'll hold off on Freestone, but longtime Houstonian, been here since 2005, been in the energy business that entire time, and we've moved into the energy transition space like a lot of other folks. So
awesome.
That's
and
the quick.
Before we move away from you, so you grew up in Houston, or
I'm a Fort Worth guy.
Okay.
So been here for almost 20 years.
Okay.
But,
Fabulous. And where'd you go to school?
went to Princeton. So
Okay.
March Madness.
Ah,
I'm
the big
excited
brain,
about
yes.
That was very fun.
Sweet 16
Yeah.
on Friday.
That's great.
And I also went to UT Law School.
Okay. Fabulous. What about you, Ellen?
Hi, everyone. Nice to see you guys. Excited to be here. Yeah, Ellen Wilkirson, grew up in Houston. So I'm a native Houstonian. Love it here. Never want to leave. I'm very, very proud Houstonian. Went to UT. Hook 'em Horns, also in the Sweet 16. So,
That's Friday. You got a big weekend, don't you?
Yeah. We're playing Xavier on Friday.
Yeah.
So
Yeah.
so should be a really good game. Very excited about that. Love Texas sports. But yeah, grew up in Houston, went to UT, have been in the energy industry on the investing and investment banking side for several years now. Alan and I worked together previously at an alternative asset management firm and got to know each other there. And so it's been great to get to reconnect and start Freestone and continue on our journey together.
Great.
Have you guys ever done a podcast before?
Never done a podcast.
Nope. First one.
This
is, I think, our first 4-person podcast. So, I mean, we are
That's right.
breaking ground like crazy right
Well,
now.
this is the premiere podcast, so welcome.
Yeah.
This is everything you do after this is downhill. So
There we go.
Yeah.
And for those listening in, if they want to kind of look at the website and understand you better as they're listening to the podcast, it's www.freestoneac.com.
That's
that
Yeah,
right?
that's right.
Awesome. Good. So we'll come back to the where did the AC come from?
Yeah.
But tell us a little bit about Freestone, what you do. I know you've made a few investments. I want to hear about those, but tell us a little bit about the business first.
Yeah, sure. So Freestone is a partnership with Tailwater Capital, which is a private equity firm that's based out of Dallas. And like a lot of other private equity funds that have focused in traditional energy infrastructure investing, they've started to branch out into energy transition and try to find ways to play in that space. So they have a number of portfolio companies, probably close to half the active portfolio companies now are in some various form of energy transition, and Freestone is one of those. Our mandate is a bit different in that we're putting together a portfolio of minority investments, early stage kind of growth investments to help start up energy transition companies, circular economy companies grow and get to the next stage. Overall, for Tailwater, the strategy, I guess, is once we provide that growth for them to be able to come in and accelerate it with bigger check sizes.
Okay.
So
Ellen, what's the ideal check size for you guys? And are you a seed investor? Are you a Series D investor? Everything in between?
Yeah, so I mean, we're pretty flexible on our check size, but we typically target anywhere from, call it 5 on the very small side to $25 million, with the hope and the investment thesis, as Alan mentioned, that, hey, let's put a little bit of money to work now and kind of continue to support the company throughout its life cycle. And then hopefully Tailwater can come in and say, okay, let's really put the pedal to the metal here, commercialize the technology, and really grow the business. In terms of the stage of companies that we invest in, I think a lot of people in the venture space like to use what we call alphabet soup to describe the stage that they invest in. I'll say we typically do invest in Series A, but rather than a specific...
Does that mean pre-revenue to you? Or
It often does mean pre-revenue, but typically the way we invest rather than by a certain stage is by technology readiness level, which is a way to describe how ready or how mature a particular technology is.
And so so tell us a little bit more about that. So technology readiness. I assume that the less ready it is, the higher the returns got to be, the bigger the risk is. Is that the right way to think about it?
that's the right way to think about it. I mean, for us and Tailwater, we're not looking to take extreme technology risk.
Okay.
So how we look at it is we want to be at a technology readiness level where we feel like the main risks are more around market adoption, commercial scale up, things that we're more capable of underwriting as infrastructure investors versus, none of us come from the technology space. And so we need to see it proven, or at least through diligence can prove that it's working on a scale that's satisfactory to meet those thresholds.
Okay. Yeah, and we can use our experience and Tailwater's resources and Freestone's resources to underwrite and assess that risk with the experts that we have at our disposal.
Mm-hmm. And you said none of us implies there's more than you two guys. I mean, how big is Freestone, and then how big is Tailwater behind you? Yeah,
so there's 3 of us at Freestone, so we have one more employee at Freestone, and then Tailwater's 40-something investment professionals, and then they also have an in-house technical team that helps us in some cases as well.
Okay. And you mentioned bring the companies along that you're investing in. Like, how involved are you with those companies?
Yeah, so
your investments.
Yeah, I mean, on all of our current investments, we sit on the board of those companies. And so, it depends on the maturity stage of the company, but venture is very different from private equity in the fact that these are often scientists that are founding the company. And so they often need a little bit more help on the business side than maybe an experienced serial management team would in the public or private equity space. And so while it is a minority investment, we typically are on the phone with the CEOs and the management team, at least monthly, if not more frequently than that, and trying to help them, connect them with the right people as they mature through their life cycle.
All right.
Sure. And so what areas do you like and what areas do you not like? Because energy transition is such a broad statement. What's exciting and what's not exciting for you guys?
So ultimately we're always looking at things that can evolve into an infrastructure like investment as they grow. And so we've really honed in on the waste to value space as something of interest. But we continue to cast a pretty wide net because there's just all kinds, as you guys know, having had a lot of folks on this podcast, there's a lot going on in this energy transition space. And the term itself is almost not apt to describe everything that's going on in the space. So we continue to focus on really looking at everything that comes our way. But so far, waste to value has been a fruitful area for us.
And you said it can be infrastructure like. What's that mean? It can scale up to the point where at some point you're putting lots of low risk dollars to work. Is that a
right? I mean, and that there's an asset component to it. We're not necessarily looking for software companies or things like that. So yeah, that can, as you said, when you're putting more money to work behind it, that it starts to become de-risk and is something that can scale.
Yeah.
Yeah.
So, go ahead. I'm sorry.
I was going to say more broadly too, we really like to focus on areas where we feel very strongly about the macro backdrop of that sector. Obviously, we feel there are certain sectors within the energy transition that we know is going to be adopted. Lithium ion battery value chain, for example. We know that that's going to be a huge industry in EVs. And so we've invested in a lithium ion battery recycling business because we really like the macro there. Other industries that we see maybe regulatory risk, we tend to shy away from a little bit.
So give us an example of what that might be. Where are you worried about regulatory risk?
We see regulatory risk within, low carbon fuels, the hydrogen sector. We think those are going to be massively adopted industries, and they have been. But for example, in renewable natural gas, we haven't done a lot of investing there because we see there as being risk in the value of the molecule itself.
The value of the molecule. I mean, so you think that $40 RNG gas might be $20 RNG gas or
exactly.
$5 RNG gas?
Yeah.
Okay.
Yeah, or we don't know.
We don't know. We don't know. We don't know.
Yeah, ultimately,
it's hard for us to underwrite that.
A simpler way to put it is that we focus on things that are economic without subsidies.
Okay. Yep. That does eliminate a number of things right now.
It does.
Okay. And so CCUS, who we've had a lot of CCUS guests on the podcast, that would be an area that doesn't really work right now without subsidies, right? Without tax credits.
That's true. And it's also a bigger dollar kind of project versus what we do. So for instance, Tailwater does have a portfolio company that's working on a project in Wyoming that is a CCUS project. So, but for kind of what we're doing, you know, it might be somebody who's invented a new solvent or who has, and so it's something that we've looked at, but it's harder for what
further afield for your area.
Exactly right.
Did you guys make it to Sarah Week at all?
Well, yeah, make it is one we attended the ancillary events of cocktail receptions and
Fair
things
enough.
like
I mean, there's
that.
a lot of value in those too.
Yeah, exactly. 'Cause, I mean, it's an expensive conference, and for a small a small shop like us on a shoestring budget, we got a lot of value from just having meetings in and around it. So.
Well, the reason I was asking is I was lucky enough to get a ticket and I've been in this business for 20 years. This is the first year I've been, but there was a lot of hydrogen talk. That's why I was asking. And it seems like, you know, one of the questions that everybody was asking was regulatory issues, but a lot of people think that, that it is. There is a big future in this. That's why I was asking, especially from a infrastructure standpoint, very tangible standpoint. And then one of the questions, I guess was Plug Power. See, asked was, you know, will we be standing up in 5 years saying, are we asking the same questions in 5 years? And when he said that, I really was thinking about our conversations that we have on this podcast and how many times do we have great ideas and these really smart people, and, you know, how quickly can some of these go from an idea to implementation? And when I'm listening to you, it sounds like you guys you don't want to be asking the same questions in 5 years.
Yeah, exactly. I mean, for us, it's not a matter of if hydrogen is going to be used, right? Like, hydrogen is used in so many processes today, but it's a matter of what exact application is it going to be used in, and that's the question that's hard for us to underwrite. We don't know what sector of the value chain or what subsection of the value chain is going to be the value creation sector within hydrogen.
And that's so I was looking at your website, and it has a lot of areas of interest. On purpose, obviously.
Yeah, it's on purpose. I mean, we don't want to foreclose anyone reaching out and that has a good business idea. We want to make sure that we're seeing all the potential companies out there that are trying to raise money and talking to as many as we can, because you know, we have our ideas about, you know, where we want to focus, but also, you know, as you said, there's a lot of smart people trying to solve a lot of problems these days, and we don't want to close the door on anyone that might have something that's groundbreaking.
Okay.
Yeah. Well, maybe it's a good segue to talk to us a little bit about the investments you have made. So I think you've done 3 deals, at least that's what we've seen on the website, I think. And so tell us a little bit about the companies, and that'll give us a good idea of how you're translating this kind of conceptual investment process into actual.
Sure. Well, so Josh mentioned hydrogen. We do have an investment that has a hydrogen angle to it, but it's really more of the battery play. So it's a startup company that is called Elemental Recycling. They take plastic, which is made from C's and H's, carbon and hydrogen, and they've got a process that cracks it into its constituent elements. So what comes out of that is hydrogen gas and carbon, but the carbon comes out in the form of a high-quality graphene, and that's an important component of battery anodes. So we're funding their first commercial plant. They're actually, as a matter of fact, up in New York this week watching the pressure test on the machine to make sure it holds pressure, and so we're hopeful that We'll see some product coming out of that.
Where will the plant be? Here in Houston?
It'll be here in Houston.
Awesome.
Yeah, so excited
Love
about that.
Yeah, that's great.
But interestingly, the hydrogen piece of it is kind of it's ancillary at this point, because in the Houston market, there's not a lot of high use for hydrogen, given the difficulties of storing, transporting, and everything else.
Yeah. So what is that? What happens to it? Does it just gets vented?
It'll get vented, flared.
Yeah. Okay. And so you're taking and so this is just is it a high? Why is it special? Why is recycling plastic special? Because it's been doing it for a long time.
We have been doing it for a long time, but as people have seen in the news over the last couple of years, a lot of it is actually just going to be burnt in another country and actually not being efficiently recycled. So if we can take it in a low carbon process and produce a valuable critical mineral, we're trying to produce more batteries in the United States that's used in the production of batteries. That's a big step forward for us.
You called it earlier waste to value. Is that what you were calling it?
Exactly. Yeah. So this is right on point there. And currently graphite is produced either from mining or synthetically from pet coke, which is from a petroleum product. So this is a cleaner way to produce it as well.
Man, I'm hitting a home run on this podcast.
I know.
I wasn't sure, but I'm just killing it today.
You
this prep was a great idea.
You thought and you knew.
Yeah.
And so does graphite sell for a high dollar number? Is that a big?
Yeah. So graphite and then graphene, which is a really nascent market, can sell from $75 to up to $100 a pound. Now the hundreds.
A pound, not a ton.
Right.
A pound.
A pound. And those higher dollar prices are right now on real small scale. People are trying to research what to do for graphene, but it's got huge potential for strengthening materials. Could be in cements, could be in paints. It's used in a lot of different things, so it's exciting.
And in this instance, it's green.
Yeah, it's green, and you're also taking basically trash, which has no value, very little value per ton, per pound, and creating something very valuable.
And so you made the investment in the company when?
Last summer.
Okay, so summer of 22. And when do you think you generate first? When's the plant get finished, and when do you generate revenue?
We're hoping that the plant will be finished this summer, and we're starting to generate revenue this year.
Okay, so pretty quick. If you're testing the machines now, it's a pretty quick build for the facility.
Exactly.
Okay.
Yeah. So it's very exciting. I think there'll be there's going to be the time to work out the kinks and lower revenue at first as we kind of optimize things, but we're very hopeful that we're going to see some good production this year. So
that's awesome. And just ballpark, how long does it take to pay out that facility roughly if it operates as you expect?
As we operate, I don't even want to say it's so silly, but it'll be a very quick payback.
It's fast. It's less than a few years.
Yes.
Okay.
Yeah.
So the technology was the key angle here.
The technology and as we were talking about earlier, it is something that had been they've demonstrated. They have product that they've made. They've shown that the process. So it was an engineering issue of making the machine of size and
scaling up the machine,
and everything else.
And so that's the risk that you guys took.
That's the risk that we're taking.
You felt like it worked. You just didn't know if you could make a machine big enough to work at size.
Exactly. Right. And very comfortable that the market's there, that the product's going to move. So that was the key risk.
Okay. So that's Element Recycling.
Yeah.
Momentum Technologies is another one we have. This is the lithium-ion battery recycling business I alluded to earlier. We invested in this one in December of 2021. It was our very first investment. We have made 2 rounds of investment in the company, so we continue to support it. And their secret sauce, there's a lot of lithium-ion battery recycling businesses out there, or people trying to make it in this business. their secret sauce is that they're taking what existing companies are doing today. So think Li-Cycle, Redwood, the big ones you've heard of that are out there, and minimizing the process so you can co-locate your recycling at the source of your waste. So you have less transportation costs, you have less needs for your operating inputs like acids and things. So it's a much cleaner process and should be lower cost on a smaller scale.
Okay. And so I'm going to show my ignorance here. You know, Josh, you hit it out of the park. I'm standing at the plate here. So you said co-locate at the source of the waste. So are these batteries stacked up at a junkyard somewhere, or are they at dealership? I mean, where's a battery to be recycled? Where's that waste depot?
Yeah, so I mean, the upstream, the space is still very nascent, even though there are these businesses that are out there, they're in the public domain. The whole battery value chain is still very much in development. So you can source it anywhere from kind of what you're saying, like a junkyard with batteries piling up, and there's metals and battery aggregators out there, to your second source of waste would be kind of manufacturing scrap. So think about the gigafactories that are being built in the United States. They produce a ton of waste just by manufacturing new batteries, and so that needs to be reused and go back into new batteries. And then handheld devices as well, your iPhone, your computer, all that kind of stuff has a battery in it, and that needs to be recycled as well.
Yeah. Okay. So co-locating is kind of one of the...
But I would bet there's a lot of that out there, though, right? I mean, you're probably in a competitive market, though, at some level to get it.
Yeah, it is a competitive market today. Handhelds and personal devices are obviously a very established industry. Everyone has iPhones, but the EV industry is still very early on. And so a lot of these battery recycling businesses are, quote, building the church for Easter Sunday type thing. They're building these massive facilities that are going to be in centralized locations that probably will be overbuilt in the near term for the amount of end-of-life material there actually is. And so people are building capacity, for 2030 when there is going to be a lot of battery waste out there. But today, it's yet to be seen who's going to be supplying all of that waste.
That's what we think's cool about Momentum, is because there's not a lot of supply right now when you're waiting for these 10-year life plus EV batteries to kind of come to their end of life, they're smaller scale. So the other companies she mentioned, maybe they're 40,000, 50,000 ton, type facilities per year to be economic. We're talking about being economic on a local basis at 1,000 tons per year, which is a competitive advantage, in this period over the next decade when the black mass, which is the mass of recycled battery is what they call it, is in short supply.
Yeah, and so they can be competitive in the fact that they can go after different sources of black mass or end-of-life batteries that are more localized, smaller sources that, Li-Cycle and Redwood and these big companies don't have the luxury of spending time chasing because they need 40,000 tons per annum instead of a couple thousand tons per annum.
Okay, so elemental, is it element or elemental?
Elemental
and Momentum, and so WasteLink is the third.
WasteLink is the third. I'll be quicker on this one.
That's okay, yeah.
So this, and I know I mentioned software. This has a software angle to it, but ultimately they're kind of a waste logistics business, and they're using software to optimize the industrial kind of commercial and industrial hazardous waste space. So they have an ERP, enterprise resource planning software that brokers use to submit waste profiles and e-manifests and things like this to treatment and disposal facilities. And since they see all that data through their software, they're able to provide logistics, direct significant volumes to these treatment and disposal facilities. So it's kind of an aggregator of this this hazardous waste space. Yeah. So it's a bit different than the others. This is more of a circular economy type angle, in that there's, taking some trucks off the road, optimizing a kind of a very stodgy industry where people are operating on a very low tech basis. Yep. And so,
but you're saying these guys, they're the software that does it, or they're actually taking ownership?
They have software. They don't take any ownership. The software is the tool that kind of collects volumes for them, but they do have assets that facilitate volume movements from brokers and originators of hazardous waste to treatment and disposal facilities.
So they're using data and information to get smarter about how all this stuff moves around, and there's value in knowing that.
Yeah, and making it more efficient. It cuts overhead for their customers, but also they're able to optimize freight lanes for trucking, et cetera, to cut costs so that they're able to share in some of that margin.
Yeah.
To us, it looks like an infrastructure investment almost, or a midstream investment, in the fact that, midstream pipelines aggregate commodity volumes. WasteLink aggregates waste volumes. And so we like that about it.
Yeah.
How do you find these companies? The 3 different companies that you're investing in, how are you locating them? Or
we've gotten really involved in the Houston startup community, to be honest, and I think it's really served us well. Momentum was a graduate of the Halliburton Labs Accelerator program. Okay. There's a lot of really great companies coming out of Halliburton. We continue to stay close to them, and they're presenting a lot of innovative companies.
Scott Gale will feel very happy about hearing that.
Yes. Scott, no Dale Winger. They're great guys. Greentown Labs is also a great source of new companies. They're incubating a lot of real asset, innovative, early technology infrastructure type companies that we would be invested in. And so Elemental Recycling came out of Greentown Labs. And so through that community, it's been great getting the venture space is very different than coming from the private equity or public equity space. It's so collaborative, and everyone works together. So people are always showing their friends deals because you want other like-minded, smart people to work with you on helping these companies grow.
I would assume there's sort of strength in numbers on the underwriting front as well.
Absolutely.
You love it and 3 of your pals hate it, then makes you love it a little bit less, I would assume, or it makes you underwrite harder at that point.
Yeah, absolutely. It's a risk management sanity check, if you will.
Well, but isn't there feedback that we've gotten that the venture world in Houston's not that great? It's a little tough for it to be a venture capitalist here in the Houston area. Haven't we heard that before on this?
Well, I think it's all relative, right? I mean, we've heard it's the environment and the mindset is probably easier or better. I hate to say anything's better somewhere other than Houston, but it's just a more established ecosystem on the coasts, generally.
But I would also say that the companies that are coming up in the Houston area are different than the ones that come up in the Bay Area.
Talk about that.
Well, so, and we mentioned the infrastructure angle. I think there's a different investment skill set of underwriting some of this super high tech, companies that come out of Silicon Valley versus the ones that are from engineers that came out of Exxon, or engineers that came out of the Houston ecosystem and are solving a specific energy problem that they identified while they were in the conventional energy space.
Right.
And so that's what I think is so great about what's developing in Houston, is that, we have all of this knowledge about conventional energy and the problems that we need to solve.
Great point.
And it's a different breed of startup is coming out.
It's almost
here.
an advantage you guys have, really, to be. I mean, you're both Houstonians. Fort Worth Houstonian people. That it's not foreign to you to have grown up around this at all times of your life, other than the East Coast schooling, right? I mean, this is you know these people, these families you've grown up with, you see the downstream, upstream, midstream, and to see kind of all of that and then what's needed. This is just a natural evolution in your careers as well. So you're probably seeing things that, because you mentioned that we don't want technology. I bet you a guy in San Francisco is not saying that at all, right? He's probably almost exclusively looking for some type of technology, I would think.
Or software.
Yeah, I'm saying that's
right.
That's
right.
That's
and
what
as
I'm using,
far as, I agree with what you're saying about just kind of our network here in Texas, but also just from our investment experience and tailwaters, underwriting something that is turning into a project management that has an engineering component that's hard asset. That is not something that is natural for a lot of VCs.
Yeah. So let's talk about that a little bit, because you're investing in different things than you have earlier in your career. And so you were traditional energy people, and now you're energy transition people, and I'm using those terms broadly.
Right.
And so talk about that, making that adjustment or change. I was going to say talk about making that transition. It felt a little bit too punny, but has it been easy? Has it been hard? What were the easiest parts? What were the hardest parts?
Yeah, so I mean, Alan and I both came from the oil and gas space originally, and the interesting part about all of this is, we mentioned we formed Freestone 2 years ago. Right coming out of COVID was when we formed the company. At that time, there was a lot of froth in the market, and there were a lot of people entering the energy transition space that had not been there before. For us, we had already come from the energy industry, and the molecule is the same. The electron is the same. The molecule is the same. And so for us, we already understood that. The energy transition space is still very nascent. The technologies that we're investing in are still very nascent. And so we're learning as we go, but I think everyone in the industry is. And we have a leg up because we grew up in oil and gas, and we understand how energy and commodities work. But the technologies themselves are new, and we're learning as we go.
Yeah, there's not a lot of folks that have a 30-year investing experience in the energy transition.
Yeah. Right.
So,
right.
I think everyone's learning along the way, but you're bringing all the same skill sets that you've developed throughout your career to the.
I mean, I actually think that it's people just like you that are going to do this. I mean, that's the whole point of this podcast, really, is to get our oil and gas friends and family to say, hey, let's pay attention to this, because that experience and that little something that you can't learn quickly, right, that you've seen over a 30-year career, that will make the difference. I mean, honestly, I do believe that the transition will be sped up because of our oil and gas friends. So,
yeah, agree. You mentioned frothy valuations, and so if we jump in the slightly back, not the way back machine, but so you started this business as a SPAC.
We did.
So, but it's not a SPAC anymore. So take us through.
Yeah.
Take us through SPACville.
You mentioned AC as part of our website, so that we were kind of stuck with. But so because we started as Freestone Acquisition, and we registered a SPAC. We're going to take it public. So this was in 2021. And we, as we did our work in the space and saw all the companies that needed money, we just came to the conclusion that there are a lot more companies that need growth capital than there are companies that are multi-billion-dollar public company ready companies. And so we made a strategic decision to step away from the SPAC. It also helped us that there were 500 or 600 SPACs out, and we just thought it was.
So you never went through the process. You didn't list. You were not trading.
No, we went through the S1 process, had all of everything ready to go, and we hit the pause button and decided to pull our registration statement and not go forward, which.
Probably saved
not
2
to pat
years
ourselves
of your
on
life.
the back. I think it was a great decision.
Yeah.
And I think we're just seeing a lot of SPACs wind up now, and they're all giving their money back. It's it's a tough vehicle to make work in a super competitive market.
I think it was a great vehicle when it was chasing fewer deals at smaller size.
Right. It should be used for finding value that no one else has. Should not be used to try to pay the highest price for a company in a competitive process.
Yeah. Agree. So you're not a SPAC, even though we have AC in your website. Thinking of this, so the SPAC was sort of the story of the past. One of the stories that's in the current headlines, I'm not sure exactly when the podcast will drop, but I mean, Silicon Valley Bank is something that's been a very front and center around early stage companies. And so how are you guys impacted or thinking about capital availability given what we saw at Silicon Valley?
Yeah, so we were very fortunate to not personally have exposure to SVB, and none of our portfolio companies did. And so thankfully, we were very fortunate there. But I think there are several lessons to be learned from this. The one very obvious one is people are diversifying their risk, making sure that they're investing across, their risk is diversified across asset classes. But I think the more important lesson here, or the more important implication from it, is that capital is just going to continue to be constrained over the next several years. We mentioned the frothy market a few years ago. A lot of air came out of that last year. Tech obviously got pummeled in the markets last year, and venture for sure more broadly. Climate tech really has been a little bit insulated from that downturn we saw last year because of just the really significant macro tailwinds behind the industry more broadly, has sort of put a floor on valuations. But and so they've been, the companies have been insulated a little bit from the broader downturn, but now you've got access to capital being constrained. And so for our portfolio companies, it's okay. We need to continue to support them, as we mentioned, throughout their life cycle, because they may not be able to go out and raise third-party capital as quickly.
So do you think your peers will be slower to make incremental commitments, equity commitments, or is it, because I mean, earlier stage companies don't use a lot of debt. So
right.
Is it the equity availability that's the follow through to the debt availability, or now folks are just scared and so the wallet gets tighter?
Yeah, and I think venture firms are going to be pickier about which companies they continue to follow on. I mean, a venture fund is typically comprised of initial investments and then follow-on investments. And so making sure that they have enough dry powder left in the fund to make those follow-on investments to continue to support their companies that they like through maybe a lull of financing, I think is going to be paramount.
Yeah, and it's the follow-ons. It's also the initial investing piece, and frankly, I think it's all good for us because we're structured a little bit differently. Our partner in Tailwater is a little bit more patient on what we're doing. But you have, on the initial side, you have management teams, a lot of whom have their head in 2021 still, looking for initial raises or maybe it's a Series B with valuations that no longer make sense in the current marketplace. And for us, we like to see valuations come down. We like to see less capital flowing to the space. So we have, we're always discerning, but that'll just create more opportunities for us to put money to work.
And so have you seen anything yet? I mean, were you close to something that you said this is worth a $50 million valuation and now it's 40, or? I
think we're seeing more of, right now, over the last several months, deals hanging out for a long time. That it just is clear that they're having a hard time raising money, and so I think the next leg down is adjustment in valuation.
How long has that been happening?
Deals hanging out,
right?
Yeah, I would say that we started seeing that phenomenon, mid last year.
Certainly in Q4 at a minimum.
Which we like to see because there's some crazy stuff that was going on. So
it does feel I mean, there's an inevitability here around just generally valuations across almost all asset classes were high. Right. You know, yieldy things were very low yield, and tech stuff was very high values, right? VC stuff, many multiples of revenue or whatnot. And so it does feel like this is just another leg in the sort of normalization of values. Yeah. So not great if you're an existing company trying to raise money. Pretty great if you're, trying to allocate capital, I would guess. Interesting. Yeah. You were going to say something.
No, I was agreeing with you. I mean, it goes back to manage your expenses.
Yeah.
Don't get yourself in a position where you have to get capital.
Right. Yeah. So you have 3 companies in your business. How many do you expect to have? You know, so in other words, if you're 3 out of 4, then that puts you in now you're thinking about exits or eventual exits, and that's going to get tougher for a while.
No, I've looked at their website. There's a lot of things you've got to fill up.
Yeah.
So we're going to keep going.
Yeah.
And you're young.
Yeah.
So we got to keep going.
That's true. I mean, we don't have a set number of investments that we're targeting, but certainly hope to make a couple more investments this year. Tailwater will also be, raising new funds. And so, maybe there's a Freestone 2 down the line, or other ways that we skin the cat.
Yeah.
But,
how long a hold period do you typically think you're going to, Wastelink and Elemental and Momentum, you've invested in the last couple of years? Are these 10-year things or 5-year things? Or
I mean, we're hopeful that they're 5 to 7 year type hold periods, but it's they are early stage, so we're pragmatic, and I guess we're eyes wide open about timing on these things.
And where will your exits going to be to strategics, to bigger PE funds, or who do you think buys your companies over time, or is the next level of capital?
Yeah, I mean, obviously it's case specific, but strategics have been acquisitive. There's certain strategic we have our eye on for each investment. I mean, certainly for Wastelink, we think a strategic is probably the right exit there, and lithium-ion battery recycling space, right, is yet to be seen.
That changes a lot, I think, too.
Yeah, I think there's a lot of potential acquirers there within the battery value chain. And same with Elemental. I think you can go somewhere strategic within the battery value chain, or somewhere on the waste feedstock side as well. So definitely strategics. And, one thing we've seen is strategics are acquisitive. I mean, they have been acquisitive, they've been active, and they're certainly trying to incubate companies of their own as well. They all have corporate venture groups, and so we see that as probably the ultimate path, but obviously yet to be seen.
Yeah, and I think down the line an IPO could be a fit for a couple of them as well.
Yeah,
but it's
so early.
So
you can sell one to a SPAC.
Yeah.
If there are any SPACs left.
Yeah, we'll make them transfer all their sponsor economics.
There we go. Yeah, exactly. You know that gig. So we've talked about the specifics, the practicalities of deploying capital in energy transition. If we zoom way out, is net zero and conservation and all of that, is that part of what you're all about? Do you believe in net zero? How do you think about the energy transition as a practical goal?
Yeah, so I mean, we mentioned we came from the traditional energy space originally. And so I think our view is an all of the above approach. We believe that natural gas is a huge part of the future of America's energy sources, as well as wind and solar and batteries and everything else. And so I think we view energy transition a little bit more broadly, and in that definition, we would include things that are making incremental changes today. A lot of people get focused on, well, what does this look like in 2050? We want to invest in things that can make an impact on emissions or waste or whatever it is today. not 20 years from now, because making changes today is just as or more important than what it's going to be 20 years from now.
What are your oil and gas friends? How do you describe what you do to them?
I think everyone in the oil and gas space understands the energy transition, and if they don't, they maybe have their blinders on or something. They have to understand it because their companies are investing in it too. I mean, you guys have seen it. All of the oil majors have venture groups where they're trying to figure out what's next for their business. Is it us continuing to produce oil and gas and investing in carbon capture, or is it something else that we can collectively solve as the oil and gas industry?
Yeah, I will say it's easier than explaining it to my doctor friends. They have no idea.
Right.
It's still a complicated thing.
Right. But yeah, I mean, to Ellen's point, I mean, for me personally, when I left Kane Anderson, part of it was, still being, having a good piece of my career in front of me still. I was focused exclusively on conventional midstream investing. And, I knew that it was going to be something where if I want to be doing something interesting and dynamic for the next 20 years of my career, it was time for me to move into a different space. And so for me, being part of that solution was a big part of kind of why we started Freestone in the first place. So,
I mean, did you always want to be an entrepreneur, and you just said, I want to do this in the energy transition space, or I mean, are you saying they coincided together? Or were you just passionate about this?
For me, was in investing. I wanted to continue to be in investing, but I wanted to find a way to move into a growth space and to be doing something that I thought was important for the next, several decades.
Yeah.
What about you, Alan?
Absolutely. I mean, same thing. I wanted to be in a high-powered, exciting industry, and that's what I viewed energy transition broadly as. And for me personally, if I look back on my career, I've progressively gone to smaller and smaller companies.
It doesn't get much smaller than 3 at this point.
Right, exactly. And so I think it was always kind of trending towards starting something or joining a small group for me. And it just so happened that it happened to be with Alan, and someone I work with before and really respected. So
that's great. You're being entrepreneurial in a business funding entrepreneurs. So give entrepreneurs some advice, or if there are a bunch of startups out there listening saying, I'm calling Freestone tomorrow to get some money.
That's right.
What advice do you have for them? What's going to be the most successful way to raise capital in the next 36 months with an energy transition idea?
Yeah. Startups
you both get to answer.
Startups are inherently resource constrained entities. That's what a startup is. They are a group of entrepreneurs that are trying to raise capital and trying to create an innovation or something new. And so with that comes time management. And to me, the most important part of all of that is people. Not hiring the right team can kill a company very, very quickly. Includes Freestone. We're very lucky. We all get along really well. I think our culture at Freestone is great, and I would extend that advice to founders as well. I mean, if you don't get along with your team, you're not going to make it. You don't have enough resources for not everyone on the team to be pulling their weight,
Correct.
And so having the ability to figure out how to motivate your team and make sure you're all rowing in the same direction, I think is paramount.
Yeah, I would agree with that. The team is hugely important. To your point on near-term advice, I think resetting your valuation expectations. Forget what you heard your friend raise money at their valuation. You can forget all that. Think about the long term and finding the right partner that's going to support you in growing your business and creating value. And that's what what we're trying to do is we're trying to create win-win situations for us and the partners that we're investing in. And so it's not about what's your mark in a round that's meaningless. Ultimately, you know, at the end of the day, it's where do you sell or IPO, and so the capital raises along the way are less meaningful. Just keep your eye on the long-term value creation. That's what I would say.
Keep your eye on the prize.
Yeah.
You know, the only hard part about shrinking down from a big company to a small company is I tell people this all the time. It's harder to run a small business than it is a big business, because you have to be, there's no off days for leadership, and you can't hide. You know, not that you want to hide in a big company by any means, but you know, you can have a bad day and you just go to your office and you don't have to answer 20 questions. But when you're one of 3 or 10 or whatever your number you guys get to, you don't get that luxury. Like, you have to just be on more days than not. So, you know, you're gonna love it. I'm 2 years into it. I'm sure you guys sound like you're having a great time. I want to hear more stories, and we'll have you back on here. And I can't wait to hear more of what your team looks like as you guys grow. But the transition from, you know, whatever you've come to 3, and then how you grow, I'll be curious to hear how that growth goes. And I mean that in the most positive way. It's very tough to lead small teams and keep culture as you guys grow. So I wish you the best of luck on that. Not wrapping up, but as an entrepreneur myself, I encourage new teams in that sense, because it's just, you know, you at some point it's just you got to wake yourself up and look yourself in the mirror and go every day. So truly the best.
We get that for sure.
Yeah. Sure. Any last topics we ought to talk about before we go to our famous lightning round discussion?
I think we're ready for the famous lightning round.
Let's do the lightning round.
Yeah, there we go.
You guys know this.
This is how people
we've heard it.
We'll try not to talk over each other.
Yeah, more about you than
well, they both
all
get
of
to
the
answer,
other questions.
though, right?
Come on. Yeah, well,
Okay.
Absolutely. So we'll do it. You want to kick us off with
I
the
love
lightning
it.
round?
So,
Now,
okay, you know the
remember-
rules, right? Single word, one answer. I've always screwed this up, so good luck with it. You ready? We'll start with you. Okay. Wind or solar?
Solar.
Solar.
Okay.
Yellowstone or Ted Lasso?
Ted Lasso's 2 words.
Ted Lasso, for sure. Ted.
Okay. 2 Teds.
Cash or crypto?
Cash.
Absolutely cash.
Okay. You know, we have not had many cryptos since we
it's
started
up
this
30.
podcast.
Well, Bitcoin's up this week.
Yeah,
It's
making a
run.
move. For 2023, the rest of 2023, I think the S&P is about 4,000 as we speak. Are you bullish or bearish?
I'm bearish.
Sideways.
Okay.
I think.
Sideways. She cheated the system on that.
Sorry.
Cybertruck or the Ford F-150?
Ford F-150.
F-150.
Okay. F-150 gasoline or F-150 Lightning?
Well, I could actually buy a gasoline one, so I'll go with the gasoline.
Also gasoline, but not for the same reason. The infrastructure is not yet in place today, in my opinion. We need to invest in the infrastructure for the Lightning.
You're cheating,
These
Ellen.
guys did not
You're
hear
cheating.
the rules to the game. This is great. It's fine. Let's just ask this wonderful question and get a one-word answer here. Does the Ukraine conflict continue into 2024?
Yes or no?
I hope not.
Yes.
Yeah.
Whataburger or Five Guys?
Whataburger.
What a burger. Absolutely.
I really like Five Guys.
You're cheating.
I'm sorry. Am I up?
Yes.
Sorry, I blew this. Bank stocks or energy stocks?
Energy stocks.
Certainly energy right now.
Taylor Swift or Ed Sheeran?
I'm too old for that. I guess Taylor
Sheeran.
Swift.
Okay.
I got called out the other day. The lady said a Swiftie, and I go, what is this?
Yeah.
Do you know what a Swiftie is? Obviously, it's Taylor Swift, but anyway, I blew this. Work from the office or work from home?
I'm an office guy.
I'm a home girl.
Okay. Do you think we'll see another IRA type bill here in the U.S. in the next 3 years?
No.
No.
University of Houston or Alabama for the March Madness champion?
UT.
Houston. To be realistic.
Yeah, and my favorite, and the only consistent question in our lightning round: will the Houston Texans make the Super Bowl in the next decade?
No.
Unfortunately,
my heart.
not.
I'm a Cowboys fan.
Hey
so,
now, there we go. We are just a mess. Hopefully we get our stuff together. We got rid of Zeke this week.
Yeah. You mean since 1997?
Yeah.
Or are you talking about lately?
That's right.
We've been very lucky to be joined by the folks from Freestone today. www.freestoneac.com. Ellen Wilkirson, Alan Boswell. Thank you very much.
Thank you
Thank
very
you
much
guys for having us.
That was great.
Thanks, guys. Great job.